Thanks so much for getting us across some of the major developments from CES. Let's trade it now with Tim Bigham, options strategist at Pilot AI. Very good morning to you, Tim, and Happy New Year to you. What's your example trade today for NVDA?
Yeah, absolutely. Happy New Year to you as well, Sam. And looking at NVIDIA, certainly a great, suite of products keeps coming out here. It's really what is the cost? How can they monetize it at the end of the day? Certainly the autonomous driving eventually, right, will be something that they can take advantage of, but that's going to take decades to even fulfill on that. I think the Rubin is probably more pertinent to earnings over the next 4 quarters or so. I think, they're going to be continuing in this kind of, race with all the other chip makers to build these better chips, if you will, which is a benefit to the end user, but it's at a cost to the companies building them. So I'm looking at NVIDIA from a stock perspective on the price charts. It's actually been an underperformer to the semiconductor holders ETF, SMH, over the past 2 months in a fairly large way. It had previously been the one leading the charges, the biggest component. So I think NVIDIA just struggling here with the valuations, the fact that, the CapEx they need to develop these products is large indeed here. So I'm just positioning kind of for a bad hair day, taking advantage of low implied volatility, doing a reverse diagonal trade, going out and buying the February 20th 170 puts, selling the January 16th traditional 175 puts, paying a little bit over $2 for that trade. Plus I have 3 weeks in the interim to continue to hedge, to chop wood as I call it, to bring in more premium. Just really waiting for a bad hair day on the chip sector and NVIDIA to take advantage, see IV go up, and this trade structure will benefit greatly from that.
Okay, an example trade for us for NVIDIA, trading at 190 and change right now. We are up over 1%. Thoughts on the overall market today, Tim? Obviously, as we continue to see this rally extending, a little bit of a softer, more sort of bumpy start for the Dow and the Russell, but it looks like we've kicked up a notch right now. What are your thoughts?
Yeah, I think we're starting to see certainly the kind of more value names take hold and lead the charge a little bit. It had been all the higher beta, high growth, the NVIDIAs of the world that led the rally up until towards the end of last year. So I think 2026 will be more of those kind of value names, the low beta names that will have to start to perform here. Otherwise, this market might run into a little bit of trouble or at least sideways action. I kind of like to lean on some of the dividend stocks here as well, given the fact that we have had such a great 3-year run. I think just probabilities favor more of a sideways market going forward, certainly given valuations and interest rates that on the long end are still stubbornly high.
Okay, good stuff. Always appreciate it. Thanks so much for that, Tim. We'll catch you later. Tim Bigham, option strategist at Pilot AI, coming up.